This is Business Week Armenia, CivilNet's weekly economic digest. Here's what's making business headlines in Armenia this week. Russia's Food Safety Agency has threatened to suspend imports of Armenian-grown flowers, throwing the booming multi-million-dollar trade in serious doubt. In a statement this week, the agency warned it would impose temporary restrictions on all Armenian flower imports starting later this month, unless Yerevan addresses what it called the continued detection of pests and infestations. In response, a spokesperson for Armenia's Food Safety Inspectorate told the Armen Press news agency her team was studying the issue and was in touch with Moscow, but otherwise did not comment. Armenia has dramatically ramped up cut flower exports to Russia in recent years, with the total value of the trade last year estimated at $32 million. For its part, Russia has repeatedly stood accused of using food safety standards as a means of economic retaliation. Since ties began souring after the 2020 Nagorno-Karabakh war, Russia has blacklisted a number of Armenian agricultural goods, including apples, bottled mineral water, caviar, dairy products, and tomatoes. In other trade news, Armenia's economy minister has indicated progress in talks with Georgia, which, for the past several weeks, has blocked Armenian brandy and wine producers from exporting to Russia, their main market. Following high-level talks, Tbilisi has allowed 52 trucks carrying Armenian alcoholic goods to enter Russia, Gevorg Papoyan told reporters this week. Another 72 trucks stuck in Georgia will be let through in the next 5 days, he added. Last month, Armenian brandy and wine producers began complaining that their products were being held up for weeks of inspections in Georgia, even though the shipments were destined for Russia. The producers, who have since appealed to the World Trade Organization to help resolve the issue, said they have never before experienced such holdups, adding that lengthy delays could lead to bankruptcy. For its part, Georgia claimed the delays are part of normal customs procedures, but has otherwise remained silent on the issue. Armenian producers typically send goods destined for Russia overland through Georgia, making Yerevan's economy highly dependent on Tbilisi's goodwill. Brandy and wine have long been two of Armenia's top exports, and Russia has long been the country's main foreign market. In 2023, Armenia exported about $309 million worth of hard liquor and another $18.5 million in wine, according to the Observatory of Economic Complexity database. Russia accounted for about 82% of Armenia's hard liquor exports and 69% of Armenia's wine exports that year. Meanwhile, the Armenian Stock Exchange, or AMX, has joined a new platform controlled by the United Arab Emirates that allows cross-border trading in an effort to ensure better access to Armenia's growing financial markets by foreign investors. In a statement this week, the Abu Dhabi Securities Exchange confirmed the AMX is now part of Tabadul, which it describes as the Middle East's first mutual market access platform. The first transaction made through the platform involving Armenia took place at the end of last month, it added. For its part, the AMX said in a press release that the move will stimulate the inflow of international capital into Armenia and increase the visibility and accessibility of our market in the global investment community. The Tabadul platform has expanded significantly since its founding in the United Arab Emirates in 2022, and aside from Armenia, also includes exchanges in Bahrain, Kazakhstan, and Oman. Last year, trading value on Tabadul hit $200 million, according to official figures. The AMX, Armenia's sole exchange, is majority owned by the Warsaw Stock Exchange in Poland. In other news, Prime Minister Nikol Pashinyan's cabinet has proposed tightening regulations on the real estate sector, citing the need to boost transparency, improve tax collection, and crack down on the shadow economy. The changes, put forward last week to Parliament, would require realtors to register with the authorities and impose heavy fines on any agents who work without government licenses. Realtors, who as of now typically operate on an informal basis, would also be required to open separate bank accounts specifically for transactions related to their real estate work. Finally, the government would introduce a pay-to-use electronic database where agents will be required to upload information on all transactions they broker. Lawmakers must approve the changes before they can take effect. No timeline for that was immediately provided. Armenia's real estate market has grown substantially in recent years, fueled by greater foreign investor interest, as well as a government program providing generous income tax refunds to people who take out mortgages to buy new apartments or houses. Last year saw the number of transactions rise by nearly 13% year on year, according to official figures. And finally, Parliament has approved a first-of-its-kind bill regulating digital assets, pitting officials who say the new rules are needed against cryptocurrency entrepreneurs who claim the rules are too burdensome. The bill, which lawmakers formally greenlit last week, empowers the central bank to oversee crypto transactions made in the country and requires crypto companies to register themselves, disclose their owners, meet minimum capital requirements, rent office space, be audited, and follow rules aimed at preventing money laundering and terrorist financing. Previously, crypto was completely unregulated in Armenia. Officials say the changes align Armenia with European Union standards and will help boost the country's investment attractiveness, while entrepreneurs say the rules are too strict and could put the country's nascent crypto industry out of business. Figures showing the number of crypto users or value of crypto assets in Armenia were not immediately available, though they are believed to be growing. And as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.